Hello, I am delighted to welcome you to this new edition of Bourdier's Monday, August 3rd report. The economic statistics published last week were generally satisfactory and demonstrate the resilience of the global economy despite a tense geopolitical context. As you can see on the graph to the left, GDP growth in the United States slowed in the second quarter from 2.1% to 1.5% on an annualized quarterly basis. But this is not a disappointment. In fact, its composition is reassuring, with final domestic demand remaining very strong, as seen in the household consumption growth of over 3.2%. Private investment also increased strongly in the second quarter, even though, as you can see on the graph to the right, this investment is concentrated in artificial intelligence infrastructure. In the Eurozone as well, the publication of economic growth for the second quarter was a pleasant surprise. For the entire zone, growth is comparable to that observed in the United States, and the main countries of the Eurozone, namely Germany, France, and Italy, are experiencing positive growth that exceeds expectations. The evolution of financial markets over the past week has also been driven by factors other than macroeconomic ones. The return of a certain calm in the Middle East led to a 7% drop in oil prices. Unfortunately, this did not benefit 10-year sovereign yields. Indeed, the decision by the US Fed to keep its key interest rates unchanged disappointed some investors. As a result, short-term rates declined, but longer-term rates, which have risen by a few basis points, did not. Thus, bond prices have slightly decreased by about 0 to 1% in both euros and US dollars. On the other hand, the drop in oil prices, which is continuing this morning with a further decline of 4 to 5% in crude prices, has benefited equities. They are up by 2.4% in emerging markets, by more than 1% in the United States, and by 0.7% in Europe. A brief special mention regarding exchange rates. The Japanese authorities, supported by the American authorities, intervened in the financial markets to slow the depreciation of the Japanese currency. The yen therefore appreciated by nearly 3% against the dollar, which caused the overall dollar index to fall by about 1.5%. If this change in trend for the yen were to continue, the impact on global liquidity could be significant, with the end of so-called carry trade operations. We will have the opportunity to come back to this. This week will once again be quite busy in the United States, with the release of the ISM Purchasing Managers' Confidence Index for both services and the manufacturing sector, and at the end of the week, the July employment report. For several months now within equities, the software sector, that is, software publishers, has been struggling and underperforming the rest of the market. Indeed, investors are concerned not only about the massive volumes of investments made by companies active in the sector, but also about the competition from artificial intelligence tools that could replace all or part of their business. In this context, the release of Microsoft's results was highly anticipated and turned out to be rather reassuring. Revenue increased by 18% year-on-year, and the Azure division, which is the company's cloud computing platform, recorded an accelerating growth of 43% in its revenues, surpassing for the first time $100 billion annually. The market reacted positively to this announcement, and we are keeping Microsoft on our US core holding list. The stock should finally bounce back after a difficult first half of the year. That's all for today. Thank you for your attention, and see you next week.